Hey guys, what's going on? Welcome to the video. So I'm going to be starting a series of shorter videos analyzing a bunch of the most heavily beat down growth stocks, making individual videos on each one, giving my thoughts on technical analysis and the fundamentals behind them, where I personally think the best opportunities are in the market, and if so, where the most attractive entry opportunities are for that specific stock. Right now, there are some very attractive valuation opportunities in the market. These are opportunities you don't get very often. Just once every few years, opportunities like this come up, and it is very important to take advantage. And of course, this is all just my opinion. There are many different ways to analyze and value a stock, but I'll be giving my thoughts, taking recommendations from the comment section on what stocks you guys want me to analyze next, and everything like that. Alright, so getting into it, in this video I'm going over Shopify stock, ticker symbol SHOP. So Shopify stock dropped 23% in just the past week and is currently down over 60% from 52-week highs. So the main catalyst for this week's drop was their earnings report. So they beat on Q4 expectations in revenue and on EPS, but warned that revenue would slow in 2022, citing a number of headwinds, including the e-commerce surge slowing, removal of government stimulus, and consumer spending slowing due to inflation. So Shopify overall is notorious for trading for a very high valuation, especially in the past couple years, and that's obviously getting re-rated as of right now. So it currently trades for about an $83 billion market cap, and after this drop is getting very close to an attractive buy in my opinion. So currently it's about 10% off pre-COVID highs, which was at about $594 per share, and at that 600/high 500s price point, I think that is a very attractive price point to enter in an area that I'd personally be considering starting a small position and averaging in slowly from there. This is a company that I think is going to be growing decades out, unlimited runway for growth, and just a dip in a very high quality business that I personally would want to take advantage of, with the hope that it does drop a little bit more than that. So dropping another 10% from here, that would put it close to about a 12% next 12 months price to sales ratio, which is the sweet spot to be averaging in my opinion, as it'd be on par for those past multiples. And at the same time, the business quality and moat has improved greatly since then. So the stock still trades pretty expensive on a price to earnings basis that is currently over 100, but it's one that you really have to look at the bigger picture on. So they're expected to have 30% plus revenue growth over the next 3 years and to start really ramping up their profitability in 2024 through 2026, which is where the traditional earnings metrics come into play. And it's projected for about a 24 price to earnings ratio in 2026 based on these current price levels. So it certainly still trades for pretty steep valuation, but it likely will always trade very expensive. Overall, Shopify is a very high quality business. Like I was saying, it's essentially an unlimited runway for growth as the company grows with their customers, and it's also a subscription-based business. Wall Street absolutely loves recurring revenue companies, since that takes out the cyclicality aspect of trying to predict how earnings will look quarter over quarter. It can make the growth just that more clean and consistent for the company. Also, one of the strongest things about Shopify is the balance sheet, with total assets about $13.3 billion versus total liabilities of $2.2 billion. So overall, that comes out to about a net positive $11.1 billion in assets minus liabilities. A decent amount of that is strategic long-term investments that Shopify has made. For example, owning 6.5% of Global E as an investment they made in the company pre-IPO, and also developed a partnership with them so the companies can grow together over time. Global E stock has performed great since IPO, even after this 50% dip in stock price. So long story short, Shopify is a great capital allocator with a killer balance sheet. Overall, in conclusion, Shopify stock is starting to look very attractive at these levels, though it's certainly still not close to a cheap valuation yet. It's a very high quality business with an unlimited runway for growth, so likely will always trade somewhat expensive. But my expectation is that if the market does keep dropping, Shopify will most likely continue to see more downside and likely drop at a faster rate than the overall market does. It's a high beta stock, still trades for pretty expensive multiples. But also my expectation would be that when the market does bottom and turn back around, this is a no-brainer to outperform for years to come. I would personally be interested in starting to average into a position if the stock was to take another 10% or so haircut down to 600 or the 500s and size in slowly from there, with the hope that the stock does drop some more. But this is definitely a company that I would want to establish a position in, even if it's a smaller position, as I think Shopify is not going anywhere for decades to come. And yeah, just a company that I would want to have exposure to over the long run, though I am practicing patience here, hoping for a larger dip than where we're at currently. So that's my thoughts on Shopify stock. Although even after this huge drop in stock price, it's still certainly not cheap, though it is getting to attractive levels, and the valuation is starting to make sense here. As I was saying, based on current levels, a 2026 price to earnings ratio would be at 24 based on those analyst estimates. Shopify is stock that's always going to trade for a high multiple, so maybe we estimate by 2026 Shopify is trading for a 50 price to earnings multiple, maybe a 40 forward price to earnings multiple, around that range, which would make it a 2x from here 4 or 5 years out, which would be a stock that would give you about 20% return for the next 5 years or so, and then more growth from there, and of course, just compounding out from there. Now, there are a bunch of stocks that I think are even more attractive on the recent dip than Shopify, a few that I want to go over in future videos. I want to do updated analysis on PayPal and Facebook. Those have been my main focuses recently. I think they're the best value growth plays in the market at these current prices. I also want to go over a few more attractive opportunities in Palantir, ticker symbol PLTR, and Twilio stock, ticker symbol TWLO. Both are down massively and they're looking like some very attractive opportunities at these prices. And let me know in the comments down below what other stocks you want me to analyze. I'd be happy to go over what the comments want the most. In these videos, I'm not going to be taking too much of a deep dive on these companies. I recommend you guys do that on your own, but mostly just looking at the numbers, the future growth projections, and the stock chart. So I hope I've provided some value to you in this video. If so, make sure to hit that like button and subscribe button. It helps me out a ton and I would greatly appreciate that. Once again, let me know in the comments down below what stocks you prefer for me to analyze next. And yeah, thanks for watching, guys. I'll catch you all next time. Peace out.